Right, when you look at the Asian trade this week, it has really been dominated by the potential for more stimulus to come out, whether or not it be in Japan, whether or not it be in China. But it's interesting when you look at the China situation, you're predicting that we will see more stimulus to come out of Chinese authorities. The data has been patchy, but then yesterday we had a really strong bounce back when it came to those trade numbers for the month of August.
Yeah, Asia is one that we're looking at. Well, we always look at it very closely, but it's one that we've become a little bit more, I guess, a little bit more circumspect on. China obviously is the clear leader in this in terms of some of the political leanings recently in terms of the common prosperity, what that means for various sectors, what that means for growth going forward. Some of the momentum models that we look at with respect to Chinese growth have turned sharply sort of lower. The PMIs have been weak. And obviously that has a knock-on effect to the rest of the region as well. So actually one of the areas that we're looking at very closely now, actually on a global equity basis, is actually probably to downgrade EM Asia, simply because of some of these growth challenges that we're seeing. And it's starting to have an impact in terms of earnings outlook for the region as well. The flip side of that, of course, as you mentioned, is the expectations of more stimulus. To the last point that we made about the Delta variant, for as long as stimulus remains in place, markets are not necessarily going to fall off a cliff, but they will be a little bit more challenged, but stimulus will help. It's the same for Asia. If we actually do get more stimulus coming out of the PBOC, that will act as a sort of short-term salve for regional markets. But we have become a little bit more skeptical on emerging Asia here, simply because of expectations of a regional slowdown.
When it comes to your favoured calls, I note that you are generally risk on. What would it take for you to perhaps alter that call and consider taking some of that risk then off of the table?
Yeah, we're not too far out on the spectrum, actually. We're quite low beta in terms of some of the risk plays that we have on. I think the biggest concern of all would be one where you would have sticky inflation, which we've had. And we expect inflation to actually fall as we go through the balance of the year, but fall very, very slowly. Where we have that sticky inflation and where the risks to growth are actually more pronounced on the downside. Now, obviously, this is a sort of stagflation-light environment. I wouldn't overdo the term stagflation, but one where economic activity slows, but central banks are still forced to react to stickier inflation by removing stimulus or, in many instances, actually hiking interest rates. That would cause quite a reassessment in terms of the overall risk picture going forward. So wouldn't expect that to be base case, but that's also not a very low probability event. That's out there as being one that we need to watch for the rest of this year.